Hey everyone, welcome back to the channel. Today we're diving deep into the Home Depot, ticker HD, one of the most watched stocks in the home improvement space right now. With the housing market still in a bit of a holding pattern, thanks to higher interest rates, a lot of investors are wondering if this is the right time to add HD to their portfolios or if we should wait for a better entry point. Home Depot operates as the largest home improvement retailer in the world, with over 2,300 stores across the U.S. and a growing presence internationally. The company sells everything from lumber and building materials to appliances, tools, and garden supplies, serving both DIY customers and professional contractors. Under CEO Edward Decker, the business has been evolving beyond just physical retail by building out digital tools and services that make it easier for pros to manage projects and inventory. Looking at the latest revenue breakdown, the U.S. market still dominates with about $152 billion in sales, while international operations contribute roughly $12.5 billion. On the product side, appliances lead the way at nearly $14 billion, followed by power tools, plumbing, and building materials. Categories like paint, outdoor garden, and indoor garden also remain strong contributors, showing how the business balances big-ticket items with everyday project needs. In the most recent quarter, Home Depot posted sales of $41.8 billion and beat both revenue and EPS estimates. Comparable sales grew a modest 0.6%, which reflects the mixed housing environment. Full-year fiscal 2025 revenue came in at $164.7 billion, with net income of $14.2 billion and EPS of $14.27. Margins have stayed resilient, even as the company continues investing in its professional customer platform. On the earnings call, management highlighted continued strength in the pro segment and noted that digital tools are becoming a bigger part of how contractors interact with the business. They also reaffirmed the full-year outlook, pointing to steady demand in core categories despite the slower housing turnover. Executives expressed confidence in navigating the current rate environment while still growing market share through better service and assortment. From a balance sheet perspective, total assets sit around $105 billion with stockholders' equity at $12.8 billion. Operating cash flow remains robust at $16.3 billion for the year, supporting $9.2 billion in dividends and healthy share repurchases. Free cash flow came in at $12.6 billion, giving the company plenty of flexibility. Key ratios show a current ratio just over 1.0, return on equity around 113% on a trailing basis, and a debt-to-equity ratio of about 4.55, which is typical for this capital-intensive retail model. On valuation, HD trades at roughly 22 times trailing earnings and about 20 times forward estimates. The dividend yield sits near 2.9%, with a payout that has grown steadily over time. Compared to historical averages and peers, the stock still carries a premium, which makes sense given its scale and consistent cash generation, but it does leave less margin of safety if growth slows further. Turning to the SWOT picture, Home Depot's strengths include its massive scale, strong brand, and ability to generate consistent free cash flow even in softer markets. Weaknesses center on its sensitivity to housing cycles and elevated debt levels relative to equity. Opportunities lie in expanding the professional services platform and growing the international footprint. Threats include prolonged high interest rates that keep housing turnover low and increasing competition from both online players and Lowe's. Over the past year, the stock is down about 3%, with a stronger 15% gain over the last 3 months after some volatility earlier in the period. The 5-year return sits at a solid 38.6%, showing the long-term power of the business model even through different housing cycles. Using a discounted cash flow approach with conservative assumptions around growth and discount rates, the model points to an intrinsic value in the low $240 range, while a market snapshot valuation comes in closer to $300. Current trading levels sit above both of those figures, suggesting the market is pricing in continued execution and some recovery in housing activity. That said, the gap between the current price and the DCF output reminds us that HD is not cheap on traditional value metrics. Investors comfortable with the company's competitive position and dividend growth may still find it attractive for long-term holding, while those looking for a wider margin of safety might prefer to wait for a pullback toward the $270 area before adding shares.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.